Good morning, everybody. This is Dee Dee with Power of Three Trading. Thank you for joining. I'm not here just to teach you the strat, but to teach you how to execute and be profitable with your day trades trading the strat techniques. If you have more questions regarding the strat, please reach out to my guy, Rob Smith at Smiths in the Black channel, Rob in the Black on Twitter and at CPAgroup.com. So I've been away for the last week, didn't have any trades, obviously. It's hard to do that on my phone. Those of you who've been following me for a while know that I like to draw my broad informations. I like to be able to see kind of where price action could go and base my trading off of those broadening or the trend lines, broad information, potential reversals off of those trend lines. So with that in mind, what we're going to start doing is something a little different from what I've done in the past. We'll, during our daily plan, so each day from 7:15 till, let's say, around 8, we'll go through kind of the plan for the day. We're a little slow getting started this morning because of technical difficulty. So what we're going to do today is just going to walk through the broader market. So we'll look at the Qs and the SPY. And then since the market is gapping today, I'm going to draw some broad information on a couple trades that I like, and we'll see how that goes. And then later this afternoon, I'll post the results of those trades. Okay. All right. So let's look at the broader market. We can see here. So I have up the daily, the 3-day, the monthly, 18-day, 3-week, and 3-month. Now, I do fluctuate between the weekly and the 2-week here as well. And I'm going to put on the 2-week for this week in particular, because today is flips the 2 and 3 week candle. So you can see June 21st right here on the 2 and the 3 week. That's when we form a new 2 and 3 week candle. Okay. So what I'm looking at is, just because these are going to flip today, it doesn't necessarily mean the market is going to go straight up in the next 2 to 3 weeks. Because what I haven't seen, and you can see here on the month and the quarter, we still have 9 days left in the month, right? So I guess next Friday, and then and then the quarter. So I'm a little hesitant to swing long, and when I mean swing trade long positions here, but we are seeing some gappers today. All right, so we drew these trend lines months back, right, using our monthly chart, and this line here, let's just take a look at it. So this line, okay, was drawn from this outside bar to this 2-up bar. And so that's where you see some potential, a potential target to the upside. All right. You may see the market kind of stall out if it gets back above here on the Qs, right? So around 282 today. And so what you're seeing here, you had this reversal, looks like on Friday, you had 2 down, 2 up, reversal on Friday. And so again, because we drew these on the monthly, that we're looking at this not as a day trade, right? These are broader markets and longer time frames. And so we're 9 days in the month, left in the month. We're going to use this as our target for today. So if you're trading the Qs, we're going to use this as our monthly target. You got this gapper up, potential target here around 282. Okay. SPY. Same thing. We drew our broad informations on our monthly chart here. And then we just drew, I actually did not do a good job on the SPY. Because I spend more time on the Qs. I had these broad informations here. That was definitely on a shorter time frame. But let me see if I can figure out where this came from. 3-day. All right, these were my 3-day trend lines. And they were just horizontal lines. So when we look at the monthly though, you can see where price action is starting to trade back up in this month. The low here is 371.86. So let me see if we can draw a trend line on that. Probably not, because this would just look like this. Let's see, trend line. Yeah, it'll look right around the same. So what I would look for in the SPY is it comes back into this range. I'm going to draw a line here on this daily chart. So it's already above this range, you can see in pre-market on the daily. So it's got to take out this candle here. So around 378, this 2 down bar here. I'll just draw a horizontal line here just to show that. So if price stays above this range here, guys, on the SPY, so stay above 370. The high here was 369.38. The high here is 370.94. So if price stays above 371, it looks like you can see in pre-market, it's right around 371. Above, I mean, it's trading above that now, 371.97. So if it stays above 371, I would use this range. It's a big range for the SPY to trade up to 378. But let's keep an eye on that. I don't know if that'll go, but we'll see. So yeah, so if it trades above that range, there's really nothing else to prevent the market from moving up. We'll look at it on a shorter time frame, but it's got to take out this guy here, this 2 down bar. All right, so let's take a look. So that's a broader market. Now, a lot of gappers today. Here's a few on my list, and you guys know I always trade Tesla, but you can see where it's gapping up. Oh, that was Fridays, but Tesla right now is at 670, so it's up 20 bucks already pre-market. Roku, it's easier to look at it this way. These are the gappers. So I use TradingView. For those of you who haven't been following me, I use TradingView, and this is how I set up my my scan. I do not scan throughout the day, but you can take a look here, and if you are using TradingView, you can take a look here and see how I set up my my criteria. So I like stocks above 60 bucks. Now Tesla's above this range, but I've been trading Tesla for years, so it doesn't matter what price it is. I'll probably trade it. I like the pre-market. No, that doesn't matter. It's the market cap, 50 million to greater than 2 trillion. All that means is I like to trade stocks that have a larger cap. The volume, I like to see the volume more than 3 million on average. This is 10 days, this is 30 days, and average daily range, I like to be above 2. And all that means is I like the stock to move more than the S&P, right? And so 2 times greater than the S&P. And the reason for that is when you're day trading, you really do want to have volatility. So I don't necessarily, I don't trade penny stocks at all. So I like stocks with volume, because that helps you with, especially if you're trading options, that helps you with your option spread. So liquidity is important in the market. And so you want to trade stocks where the options are at least, I mean, necessarily say no more than 30-cent spread, because you've already, if you're trading a contract, you're already down $30, if you will, in one contract, just based on the spread alone. Okay, so you want to trade things that have tight spreads. So that's why you see people trade the indices a lot. And then I like for my pre-market volume, pre-market change to be about plus or minus 2%. And the reason for that is if I'm going to trade gappers, I like to see a significant gap and a potential reversal. So here's what's on the list. But of course, I can't trade all of these. So I just look for stocks that are my faves. There's a couple more that popped up. And again, that have really good options. And so anything in the chip space, right? Qualcomm, Applied Materials, NVDA, I like to trade. And then, of course, Tesla, high volume stocks like Airbnb and Etsy. I don't know if Etsy is on this list today, are good stocks to trade on options. Roku, Netflix has kind of fallen off my list. I've recently added Amazon after the stock split. All right, so what we're going to do today, given our time, since I got started late, is we're going to chart Tesla and we're going to chart NVIDIA, okay? And then hopefully tomorrow we won't have some of the technical difficulties since I've had to switch computers. All right, so let's chart Tesla. And the way we do it is we look for outside bars using our 90-minute time frame. Absence of an outside bar, we use our 2 ups and 2 downs, okay? Because those are compound threes. All right, so starting with the prior day's range. So this was Friday, guys. We didn't have any 3 bars. We know we have some 3s here. So we're going to trade either to or from any outside bars where it makes sense. Like I said, Tesla's already gapped up 20 bucks. So we know that we want to go long if it stays above yesterday's high. So if you can see this, I'm going to do this real quick. This is an inside day. Okay, so this would be your 2 up, 2 down. But again, this closed down. You got to take that range. Let me just look real quick on a 2-day. Today starts a new 2-day candle as well. So if price trades above this range, guys, you have some opportunity for this thing to roll. We'll see. I'm just going to draw a line here since it's got to take this range. So if it stays above this range, you can see it continue to roll. All right, so let's just look at, so this was just on the daily, but let's draw it on the 90. So it's got to stay above yesterday's high. We know that. So this was yesterday's high. This is an inside bar. This was a 2 down bar. So we know we want price to stay above that range. But if it comes back down, it's got to hold. So what I'm going to do is take this 2 up bar here to this 2 up bar here, because it's got to hold this range. So what I'm looking at is if price breaks below this range. So I didn't draw it this way because we don't want to get stuck in here. I drew it this way because my thought process is this is an inside bar, this is a 2 up bar. If price trades back into this range, and I'm going to draw another one here, maybe, we'll see. But it's got to trade below this range. Here's a problem I'm having with this, because this is an inside bar. This is outside of all of this. In other words, I don't want to get stuck inside this range. This was a 2 up, here's a 2 down, this is an inside bar. I would go so far as to say, unless price trades back below this guy, I don't want to be in this position in this trade. So we're going to draw this to this next lowest candle. Let me see, 648, 650. So I would go short. So let me clarify this. This is a gapper. So it's still early, right? So you still have an hour and a half before the market, hour 45 before the market opens. What I'm looking at is if price opened inside here and traded down, I would look to short it, right? Because this is a 2 down inside, and I would look to short, but I don't want to get stuck in this range here. Now, that doesn't mean because it's a gapper, it won't gap up, hit a level, and come back down. That I'd be interested in, but I don't want it to trade inside this range because this will get us chopped up, right? We want to avoid this area. But if it trades below here, I'd look to go short. And then we have our low of the day. Let's see how far back we can go on our low of the day. Let's see, that's that low, 644.78, 650. I don't know here, 644.21. All right, so the way we draw these is this is a 2-up bar. We want the next lowest bar in this range. Or should I say next highest bar? It was a 2-up. This was 639.59. Do we have another guy that's lower? 644.50, 644.21, 644. Okay, so this will be our broadening formation for this range. And you can see here, guys, this is trending down, right? And the reason for that, this is a 2 down bar. The market is trending down. This is inside. It did not capture the high. So it closed low, on to the downside. It didn't close the low of the day, but it closed down. And so we want to trade the low of this. This will be our first target. Then you have to take this guy out. So this is our next 2 bar here. Low is 630.10, 628, 633. Okay, so this will be our next target. That's if Tesla trades to the downside. Okay, if Tesla trades to the downside at the open, trades below this level, we'll look to take this out, first target, this out, second target, and then you have your low of this day, which was what, I guess, Thursday. Okay. All right, so that's the short side of this trade. Now the long side, again, like I said, we have to stay above this range for me to look to go long. So if price trades above this high, let's see, this high is 666.97, 662.91. So if you can imagine 2 down, inside bar, 2 up, which it looks like it wants to do. The market is gapping up, you know, the broader market as well. So above this range, we're going to go long. This is going to be our first target. This was that 2-2 2-day daily range we drew. Let me flip back to it so you can see what we did here. This was here, guys. This was this was a 2 down, 2 down combo, right, on the daily. So what we're saying is, and this is also the 2-day candle high. So this is a 2, so above this 2-day candle high. So what we're looking at is if price can take these 2 days. So I put this here, then there's potential for it to go higher, but this is going to be our first target because it could take this out at this level and trade back down. So we're going to be prepared for a reversal here. Prepared for a reversal here. All right, so let's look at our outside bars. We have an outside bar here. We have an outside bar here. We have this 2-up bar here. Let's see, what else is in that range? Nothing. Nothing. Yeah, all of this is above that level, that above this too. So I'm not gonna, I could draw this here, but as you can see, we don't want to get stuck inside this range. So it doesn't really matter. I'm just not going to put it there too many lines. What I'm looking for is if price trades breaks below here and potential for it to go short, but we got to be careful. We don't get stuck in this range. We want it to trade below this range for a short. All right, so here, looking to go higher. Inside here, I think I want to avoid. Again, I got this outside bar here, guys. That's what I'm eyeing. And I don't want to be inside this range. So I'm going to draw this broadening formation here. The next highest bar in this range. Let me see what's that. 679.90, 679.96. Okay, we'd have to go way back. All right, so if, and this is an if, so if you can imagine this is an outside bar, 3, 2 down, potential 2 up. Here's what I'm looking for, is if price can take this level, right, then I'm looking for price to trade up to this range here, this outside bar to take this. Okay, so our long positions on Tesla would be, we got a gapper, so that means we do not trade in those first, and I don't trade in the first 18 minutes anyway. I want to see, and it may hit here, guys. Let me look at where it's gapping. It's up substantially already from the close. Okay, so I'm looking to see if price is gonna trade, gap up, hold this. We want it to hold this range for a long. If it gaps up, hits this range, trades up, comes back down, we're going to hold. We aren't going to do anything. Then we'll start looking for our inside bars on the 3, 6, or 18, whichever shorter time frame you trade. The idea is using our CCI, because I want CCI to be above on the 18. We'll look at the 18. I want CCI to be above 0 on the 90 for long, and below and above 100 on the 18. So we're going to use our CCI to give us confidence in the continuation of this gapper. If CCI starts trading back down on 18, we're not going to go long at that time. And then we'll use our broadening formations to determine whether or not this gapper is over, and look for a short if it starts to trade back down into these ranges. Okay, so let me just write that up. And then of course, so if you're in this range, you're 670, and then you got to take this guy, which is huge level. I got this 2-up bar here. Let's see. We'll take this 2-up bar. We'll take this inside bar to this 2-up bar here. That's a huge range, but if price trades back above 700, it certainly could go to 705. So just, yeah. This is the difficulty in trading, guys. It's such an unknown. I use my 90 to draw these because I'm looking at these outside bars and these ranges and saying, well, I don't want to be stuck in this range. I don't want to be stuck in this range. I don't want to be stuck in this range. But we have to use good decision making. Once the market opened, you have to let this market open. It's a gapper. If it hit these ranges, I don't care if it blows through here and comes up through here. If you're not on a shorter time frame and you're not quick to the draw, because you could see a kicker continuation, but if that's going to happen, that means you're going to go 2, 2, 2, 2 on the 18 or 15, which means you're going to have to go to the 3, the 5, 6, whatever shorter time frame you use to enter that trade. Okay. So we have to be mindful of that. So here's how I'm going to draw this up. They actually changed this too, Jim. I'm like, Trading View has been busy. All right, so we're going to short below We're going to go short below. What do we say here? The low here is 648. With CCI below -18. Sorry, no, -100 on 18-minute. Okay, now that means, so let me clarify this, guys. Can you all see this? Maybe I should put it in. Yeah, make that. Okay, so what does that mean, guys? This is at the open. Now, this is not after the market gaps up and then starts trading back down. Okay, so I just want to clarify that this is if price trades and immediately trades down below this range here. But given that it's gapping, so we're going to say long above. We said this range here. So the high of the day, which is, we'll just round up 6663. The high was 662.91 with CCI above plus 100 on 18-minute, or you can use a 15-minute. All right, and I'll show you what that looks like. So what that means is, I'm gonna flip over. Actually, let's do this. Let's go back. All right, so what does that mean, guys? Here's the 18-minute. With this gapper, we know it's gonna, if it gaps at the open, this will be above plus 100, given the move here and pre-market. Because you can already see that here. Here. Da, 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 da. Let me go back. I did not want to do that. Here, here. Extended hours. All right, so you can already see that here on the extended hours, it's gapped up. And this is why I don't use extended hours. But you can see that here, it's gapping up. So you know it's going to be above plus 100, okay? Now, what does that mean? CCI needs to stay above plus 100 and trend up on this 3 and 18-minute. If at the open it gaps up and you start to see, let me see if I can find this. Now that it's not a gapper, but if it trades up, and this is really, so of course I wasn't trading, but here's where this is at 939 above the 18-minute. I mean, before the 18-minute. But if you start to see market trading up, and then you see this is a TTO on this 3-minute time frame, which is why we use it. If you see this TTO and Tesla is gapping, trading up, CCI is still good here on the 18. You can, Jesus, 8 o'clock already. You can take this. You can take this. Right? So 2 up, 2 down. This is an outside bar. Now, again, we just drew this, but you can take this 2 up or 3, 2, 2. When you start to see CCI crossing back below, you got to take your profit here. Okay. When it's starting to cross back below 100 on this shorter time frame, I'm out. I see these long wicks inside right here. I'm out of this position because I'm visualizing. And then of course you can see this is 948. This is probably turning red right in here, right? Because this was the flip. So this turns red right here, right here. All right. CCI is crossing over. You have to get out of that position. Okay. So what I'm saying though is this is going to be a gapper. So here's what I want you to start to keep your eye on with CCI. This is how I figured out how to either get into trades. Yeah, this is still good on the shorter time frame, or don't enter it at all and wait. And this is where you want to start training your eyes. It's not just about 212s, 222s, 322s, because the market will do this, 3-2, and immediately come back in on you. This is how I use CCI now. And if I see CCI crossing back down on these trades, the market may be making newer highs, but CCI is not. That's an indication this market is slowing. So if you get into these trades, have your finger on market order and exit, okay, when you see this thing taking that 3 out, okay? So if we see this gapper today, in the first 3 minutes, it trades down. Don't try to reverse this. Don't try to take this short, because CCI is probably going to be above 118. Just let the market do what it does. Let it take some folks out, because there's probably going to be some folks long. They're going to enter early. That's not what we do. We still wait for our actionable signals. It may hit our broadening formation. I'm not going to short as soon as it hits this. I'm going to wait patiently. Let the market do what it does. 18-minute close. Aha. Let it settle in. I see a doji. I see what I think, something like this. Let's say it gaps up, comes back down, creates this little doji. Morning star. I'm looking at my CCI and I'm going to take that position long. Okay, so be patient with these trades. Do not try to jump in at first glance, especially on gappers. There's certainly a potential for this to gap up and reverse. And that may not happen until the top of the hour. So just be careful. Like you see here, this traded up, came back down. There was an opportunity here to take that short, but it didn't take the day, right? And then it got stuck in the range. All right. And that's where I just go find something else to do when it goes inside 90. All right, let's see if we can do NVIDIA real quick. It's already 8 o'clock. Sorry, I got started a little late. But same thing here, guys, same thing. Look, we're going to start on our 90. We're going to look at our outside bars. Let me see this. Yeah, I don't know if I like, well, it's a gapper anyway. So here is outside bar, but it kind of looks like a hammer reversal. Okay, good reversal pattern. Let's look at the 2-day. Definitely above the 2-day range here. So will it take 169? Possible. We'll just do this on a 2-day chart, because it's got to take that range if it's going to continue. All right, so that's this guy. Let's look at the 90. All right, so we know we have an outside bar on the daily. So we're going to take this and say, if price trades above this range, we know we're going to go long, and it's gapping above that. Very similar to Tesla. The reason I traded this down is because this has to hold. If it breaks below this range, this is the lower range of everything above it. So we want to see this hold. And if not, then we can see a potential short. But again, like Tesla, we had this 2-down bar here. We don't want to get stuck in this range. So let's see, 156.85, 157.05. So what I'm looking for is basically if price trades below yesterday's open. So this was 156.85. The open was 153. So below 156, we'll look to go short, because we got this outside bar here. I don't want to be in this range, very similar to Tesla. I do not want to be in this range. I want to go long above here, and I want to go short below here. Okay, short below here. But because this is an outside bar, guys, we have to be careful. We do not want to get stuck trading in here, because you got this inside bar. So trying to think what I want to do with this. Maybe I'll take it to this outside bar here, this inside bar, because it's got to take this. This is an outside bar. This is an outside bar. Before, if it trades below this range, you may take this out. If it takes this out, then because you're in this range here, it's got to take this 3 bar. So if it takes out this level here, that'll take out that level and potentially this level. So we'll just draw this broadening formation like such, and these will be our targets. And so again, visualizing, we got this outside bar, so we know we have to get outside of this day. This is a day. So we want to go long above this range and a potential short below here, but understanding you're inside this inside bar, which means it's got to take this level out before it can take out this level. So these will be our targets. So short below here, first target, second target to take that 3 down, and that would be 3-2 down. But looking at the broader market, again, we started, this is a new 2 and 3 week flip. Potential for this market to move higher. So we want price to trade above this range. I want to go long here, but we got this big 3 bar here that we have to get out of. This was the Fed noise, it looks like, June 15th. I wasn't here, so I think that was that day. And so we now have to get out of this range. So we have a 2 up bar here. Let's see, 164.27, 163.12, 163.86. So potential, this would be this range. Yeah. Let's see what this looks like. Yeah, not much difference. So what I'm looking at is, you got this big mother bar here. So if you got this, you got a 3 bar here, you got 3s everywhere. All right, so let me take my time with this. All right, so we know we have to get outside of this range, right? We know we have to get outside of the daily. So that's this level. We're going to leave that. Now we have to contend with, we have this 2 up bar here. Price is already gapped above this range. So I'm not going to worry about this level here, because that will be covered. We want to get outside of this guy. This was a 2 up, this was a 2 down. If you can envision that, I can just see it just based on the time frames. So price is already above this level here. So we have to take this 2 up bar here. We have a little 3 bar here. So I'm just gonna take, this is still inside this range here. Still inside, so it's got to take this daily range here. So I'm going to take that. Hang on a second, guys. Let me delete these guys. Let me start back with my methodical approach. All right, so we got to take out this high, yesterday's inside bar. This will be our next range here. You got to take out this high here. And that's this level. That's this broadening formation. So this 2 up bar, this two down bar here. Got to take that guy. So if price trades above here, we're still looking good for a long. If it crosses back over, potential for it to come back inside this range. I may want to avoid here until I get some clarification on a CCI. Now you're inside this range here. You have a 2 up bar here. You're still inside this range. I think I'm okay with not drawing a broadening formation here because I got this bar here and I have this bar here. I got this 3 bar, because you're already in this range, guys. You're already in this range. You have another, okay, we got this 3, 2, so we can envision 3, 2, 2. So what I'm going to do is draw a horizontal line right here. Actually, we could draw that. We could draw this way. So the low of this bar to this horizontal line, I mean, to this 3, 2 down bar. All right, so here's what I'm looking for. I know it's a little confusing, but I'm looking backwards, trying to figure out what levels NVIDIA has to take out to go higher. All right, so let me start over. This is an this is an outside bar. We know we have to trade above this range for price to go higher. 3 bar. This will be our first level. So given where it's gapping now, it certainly could come down, but we need it to hold this range for a long. So it could trade all the way back down, right? So we've seen it. We could have a gapper come back down in the first 18 minutes. That's okay. I'm not ready to short this. You could, if it crosses back below this level, but be prepared to exit if it hits this level and then starts to form a doji and CCI is trending back up. So be careful with that, because with these gappers on the 18, it's probably, CCI will probably be above plus 100 on the 18. I personally would not trade it, but if you are excellent on the shorter time frames, you absolutely can short this. If it gaps up, comes back below this level, this will be your target on a short scalp. But in my case, I'm just going to hold, wait to see if on the 18-minute flip, see if CCI flips, trades back down, and look for a short below this range. But on the long side, what I'm looking for, if this does come down and hold, I'll look to go long. Maybe it happens at the top of the hour. So the next 18-minute flip, I think it goes 48 and 06, 10:06. So at the top of the hour, maybe potential to go long as long as it holds this range, and CCI is still good on 18. This will be my first target. This is my second target. And then you have the high of this range here. So you got this 3, 2. Since this is a big outside bar, I'm just going to take it in to this level here, to this outside bar, because you're inside this range, guys. So I'm just going to take this outside bar, and this will be my next target. If price trades above this June 15 high, you got all of this to contend with, okay? So it's got to get, because remember, this is a gapper. So I will do this just to show this gap. Now, well, you actually got this here. This is that low. So now it's trading inside that gap. So if it trades above 168.68, then just just bring your stops up and let it see how the market plays out. But if you see a reversal or an inside bar on this 18, let me just go back to my 18. And so you can see how I would play this. If well, let's write it up again. Hang on a second. All right, so we're going to go short below this range. I'm going to go short below 156.85. We'll just call it 156. We're going to go short below this. This is a 2 down bar. So you're inside and outside bar here, guys. This is outside, inside. You're inside this bar, which I don't particularly care for. This will be your first target. This will be your next target on the short side. But CCI, again, same thing. Let's CCI below -100 on 18-minute. And the reason I do that is because I am not interested in trading when CCI gets caught inside these between the lines. When CCI is between the lines, like you see here, you're just getting chopped up. You may have a little range here, so you'd have to go to your 3-minute. But if you're in a 15-minute chart or a 30-minute chart, you're going to get chopped up here. You have to go down to your shorter time frame, 3, 5, 6, to enter, or 2 if you like, to enter into these trades to get a little range. If you're trying to enter at the top or the bottom of these 18-minute charts or 15-minute charts with CCI is looking like this, or what I call my piano keys, you're just getting chopped up. And so you can see that on the longer time frame, you're inside this range. It's not an inside bar because it trades down, but it starts out that way. You're just, you want price to go 2, Rob always says, what's the next 2, next 2, next 2, not what's the next inside bar. All right, so this is where you're getting chopped up. If you're losing money trading the strat, it's probably because you haven't mastered those emotions. You see these moves, but you're inside these larger time frames, and those moves, the ranges are getting tighter, right? These ranges are getting tighter, not wider. Okay, once you go inside, they're just getting tighter. Find something else to do. Come back after the flip. I like the 90-minute flip, but you can use a 60-minute flip. Just don't get stuck in these ranges. All right, and so very similar to Tesla. Okay, range is getting tight. If it's not below 18-minute, I'm not interested in, meaning it has to stay below, not that it crosses. As soon as it comes back up, guys, this is over. So it has to stay below, and same thing on the long side. Okay, so we're gonna go long, above, and we said the high of the day because we're an outside bar, so 159.95, we'll say above 160. CCI above plus 100 on 18-minute. Okay, and the way we're going to look at this, again, we're dealing with gappers, very similar to Tesla. All my trades look alike, guys. All my trades look alike. I mean, you have to get very disciplined. All right, you have to get very disciplined with your strategy. CCI helps me with these moves, and you can see NVDA very similar to Tesla. When it crossed back below here on that 100 on the 18-minute, you saw this 2 up, 2 down. I want to get into this trade, right? But that doesn't mean it's going to last forever. It crossed back below here. If you waited till you got down here to get in, you waited too late and it reversed. So you want to get in on these, what I call my crosses. I want to get in on these crosses at the top or the bottom of these ranges. So top of the range crossing down, I want to go short. Bottom of the range crossing up, I'm looking to go long. And so when you're looking at NVIDIA on this gapper, you're going to have to be patient, because that does not mean it's going to reverse. If NVIDIA gaps up, and let's see if we can find something similar, but if it gaps up and, okay, we can use this as an example. See how it gapped down and came back up? Let's see if we can, let's show you this on a shorter time frame, because this is how you study price action, guys. This is how you go back and you review market on different time frames. So you see how, I was actually looking at a different one, but that one would work too. Yeah, where was I? Now I can't find the stock I was looking at, or the day I was looking at. Hang on. So yeah, this day, June 10th. Let's do this again. All right, June 10th. All right, so again, this is an example of a gap down move. And you will see this, and don't get freaked out. Don't get freaked out. And don't be in a rush. So this was a gapper that stayed down, and this is what I mean. So in NVIDIA and in Tesla, this could gap up and stay up. This was a gap down and stay down. And I just want you to see what that looks like and what I mean by this. So this is the first 18 minutes. So you can see how price gapped down. So it went two down, traded up. And you can see your CCI comes back up above -100, right? But what is CCI doing on the 18-minute? And where is CCI on your 90? Okay, so today will be tricky because this was in time frame continuity. You're going against it right now. But here's what I want you to see. CCI has to be, and you can see the 200. He's getting in the way here. You see the 200, well below 200, well below 200. So that tells me, if I'm trading this, that this downward move isn't over yet. And it doesn't mean it's not going to reverse at some point, right? But it's not over yet. And of course, CCI is well below -100 on a 90. You're not going to have that maybe here today. But what I want you to see is CCI crawl back up. See, I kind of just flatlined. Here's your move on this. There's your 90-minute flip. Your open, guys, was here, though. This was your open. This is your 90-minute flip. It's now red again because it turned green when it came up here. But why would you go long here? So my point is, this is not a reversal yet. This is not a reversal yet. So think about what you're going to see today. You're going to have this gap up. It may gap up, trade down, just the opposite of this, but it may not be a reversal yet. You need to have your confirmation, guys. I'm telling you, I have gotten chopped up so many times when I see this trending back up and thinking, oh, okay, it's going to reverse now. Not yet. This didn't reverse until 11:36, and you can see that after the 90-minute flip, this went traded all the way down. You had a TTO here on this 18-minute and came right back down. So just be careful with that. When you're seeing these move, that doesn't necessarily mean it's going to reverse. I need my 18-minute to show me something. I may miss it. This thing could go all the way up or all the way back down. But you know what? I know I'm going to get another trade. Why? Because this isn't crossed over. So what I wait for is an inside bar or a 222, and then I'll make my move. And I'm okay with that. I'm okay with missing all of that extra because I just don't have the confidence in the trade. And so that avoids, especially if you're on a small account, and we didn't talk about that, but if you're on a small account, guys, you don't have the luxury of getting in and out of trades. I can jump into this trade on the shorter time frame, jump right out, and then wait, jump back in. But if you have, depending on your account size, you may not have the luxury of doing so. And so don't let your first trade be your big loss. Okay, we want to avoid that. Okay, so that's how we're gonna play this today. I'm gonna wrap up given the time, and then tomorrow we'll try to get in a little quicker. For those of you who follow me all the time, our favorite scripture is the plans of the diligent, Proverbs 21:5, the plans of the diligent lead surely to advantage, but everyone who is hasty comes surely to poverty. We will not be hasty in our trades. And I don't know how else to say it other than you have to manage your emotions, guys. You have to manage your emotions. When you are trying to trade the market, and you see these moves and you get excited, and this is where the broadening formations have helped me. And I have in my mind, you know what, I am going to trade this if this does this. If it hits the top or the bottom of my broadening formation range, I have to say, top of the range, look for a reversal. You have to, it is about question and answer. It's an if this then statement on every move that you make. So if you're not going through that process mentally, psychologically, then you're probably hastily getting into those trades, and they may work out or they may not. Ask yourself how much confidence you have. That's going to determine how much risk you want to put on. All right. So let's be careful. Let's not just jump into these trades, and let's find a way to be profitable. Okay. Thanks everybody for joining. I appreciate you following. Take good care.